Welcome to TradeTheMBI.com. This is John's report is for the 25th of May, and we continue to get tests of the 61% line right here, or you could even refer to it as the green EBM. But every time we reach this level, we've been finding buyers wanting to gobble up. So much for the market is about to collapse, blah, 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 that we've heard forever. What we saw was a rise in midterm buyers. Every time we got right into this point, we pretty much flat from a long-term buyer, but we're not getting any distribution. So sellers from a short standpoint have been fading all along here and actually are below the zero line if you look at the negative 86 right there. So that's why we've kept talking about each of these different numbers from the 61%, the EBM greens. In fact, I will put them up again one more time here so that you can see what those levels are, because it becomes significant in trading across those levels and knowing when they come intraday, particularly if you're intraday trading. From the NQ standpoint, we knew that this was already better because the shakeout is much cleaner. In fact, we got the first rising bar starting today from a shakeout standpoint, and we had the movement of the NASDAQ earlier than the Dow. Now, of course, you're not going to get any sustained pop or jump until we get that orange to move into a critical dip below the red. Like every time it does, you tend to get stronger pops from when it initially comes in. Oops, went too far. Crazy move here for TLT. Just won't quit. This is just a strange occurrence, because you would expect with a TLT rise, a gold drop. Here we have the oil fade back just a little bit. It's pretty modest. In fact, we're getting a pretty extreme. Could be even seeing a significant DOC spread if the sellers here move across the red line for a short configuration. Plenty of positive extremes to fill back. We talked about that, but it's gotten just quite extended here, reaching the from the warning line of yellow on the shakeout to the well overdone plus 25. It was ready for a little bit, but here's the gold. So you got gold bouncing at the same time. Lower rates, go figure. That's kind of an anomaly. It will have to work itself out, but from an intraday standpoint, it started off quite interesting. We had the open period, which led to a nice spike, and it produced, now you'll see my little dots. I got dots everywhere here. I know it's crazy, but all these are representing of the extremes. And when they get into what we would call the beginning of an algo activity, they usually become points that we looked at for retrace, which is why I have some of those levels marked from before. And what's important about them is where they come in at, particularly when we get these dips of the green above the 50%, they tend to push back up, so they become what we would equivalently refer to as support. Even though you don't have a full buy signal within them, you get that kind of accumulation going across because it doesn't break down. But then we ended up with this setup right here, which is a tough one for a lot of people, because you have to look at it from this standpoint. You have bulls rising as at the same time there are no shorts in this setup with the cyan representation. And the fact that they don't get across, meaning the green doesn't cross above cyan, and that rejection right there, I shorted this pretty heavily, because at that particular point you have short-term buyers fading, and you didn't get enough momentum to push over the shorts. And sure enough, that leads to these kinds of dramatic drop moves. And in this particular case, it was a significant decline that took place right in there. And then we got into the distribution phase, so I knew any pop that was going to take place there was just going to produce a new low, which it in fact did. But then it produced the low on a bit higher extreme histogram, you can see right there. And so that led to a little bit of a pop, but still within very heavily negative shakeout. It was just a matter of the first lower shakeout right at the 23, and that led to the white candles. And the white candles are beautiful because anytime a white candle comes in, you expect new lows. And so it's just, even at this level, it's like you can short here. If it pops up to the 23, you can short it again. Likewise, because you're expecting it to make the new lows. And then you see, you end up with all these little green dots, all after having made the lower low after the dip below the red line. So this one expected lows to come down here. Fine, did that. And then we end up with the higher extreme histogram. At the same time, we ended up with our regular buy signal. And even if you wait till above the 23%, that point started to take off, and once it gets over the 50, we know that. Now, this was interesting because with the gold under 50s, a lot of times you expect this to return back to the lows, and most times it would, except for in this case, we ended up with very strong shakeout readings. There was no real rollover at any point. In fact, we stayed above all the way through, and it went all the way to the 100% because we had dropping highs with flat lows, pulls price up to that 100% line, which it did, and then we kind of trailed across. We had a couple of decent DOCs, and so what happens with these is you get the red line in that, so you expect at least a retrace of the lows in those cases. But what happened was you ended up with the rising 76% line, and so the best it was retraces. Each time you get the signal for a retrace with even the yellow dots, you can expect some weakness, but through the huge confluence, you got all the ABMs for support reasons, and then you have the 76 at the same time you're getting the green dots, which those indicate that you've got nice support at those levels. And when they support there and the shorts can't overwhelm it in a clean DOC spread, yes, it fits into that weak category because we weren't getting significant move, but you would expect this to break down because this is a clean short signal from there, and it just came across. And there's nothing you can do about that. It is a clean signal. All of these DOC spreads were fairly decent. You had the perfect snake development here with the orange rising, steel falling, but they just hit support every single time. And then obviously started to take off. And then even now we're in a whole series of them. So these will probably get filled back in, but that's an indication that any fill back on these is really just going to return back to the highs. And you can see all the red right there. So decent algo activity. And then a lot of times if these do pull back all the way, what you get is a work back through during the day. And it rises. There's still some levels back here that need to get filled back in down at the 27, 15, 18 range. Right in here, 1780, 75 range. So worth noting that. And it's just a matter of that testing back and forth within the signal. So it was quite interesting. Got a little flat there. The liquidity variations are certainly going to cause some of this bouncing back and forth, particularly as we're in a consolidation period and they're fighting for which direction. But still, overall, the bias from a daily standpoint looks fairly decent to the upside. And so we just continue to trade against it. Doesn't look bad, though, for shorts because we know that down to that 2709 range, there's still a lot of activity. So we'll just follow it one step at a time. A nice improvement in the range here. And like I said, I'm going to have this as an input on the Fibonacci lines. When you come, you'll be able to just put in a 1 if you want it to show, otherwise 0. But it's neat to be able to see this because then you can kind of gauge the range between the 100% move back down to the 0. In this case, we have rising lows on our new highs. So if these highs continue to go across and the lows are still rising, then we would expect at least a pull back towards the 50%. But as that 50% rises, it just gets higher and higher. So it's not as big a move back. But there you have it. Right now we have cyan under red, which always along until it's not. This is the closest signal to a short right here when you get this dramatic snake move. where orange really skyrockets with green coming from above. Usually, though, you want to see green cross below the red as a clear signal that you're going to get more of a follow-through. In this case, we don't quite have that, and you're also getting a rejection now of the sign, so let me see a little pop back up here on this one. And that's the long and the short of it for now. As always, though, if there's anything dramatic, I will put it up there. This was kind of unusual to have this deep dip bought back all at the same time. So that shows some power that's existing in the market. Definitely want to respect that there are still plenty of buyers out there, despite what you may be hearing news-wise, that everything should go to hell in a handbasket, because at the end of the day, the economy is growing, and in a growing economy, you get that gentle ebb upward. This is, like I was talking about, from the mid-90s. It just, you get some retraces, but at the end of the day, they get bought up, so it becomes a nice active play. As always, trade well. We'll talk again later.